$43 billion. That's roughly how much Stanley Druckenmiller has moved through markets over a legendary career. And right now, he just made one of his most aggressive portfolio pivots in recent memory, completely dumping Alphabet and loading up on 3 memory and storage stocks simultaneously. This just happened, and most investors don't realize what it means yet. Here's what's really going on, and what you should be thinking about right now. Druckenmiller's latest 13F filing just dropped, and it's a bombshell. His position in Alphabet? Gone. Completely liquidated. 0 shares. This isn't a trim. This isn't profit-taking. This is a full exit from one of the most dominant companies on the planet. At the exact same time, he's piling into 3 memory and storage plays that have been absolutely skyrocketing. We're talking a simultaneous, coordinated rotation, not a coincidence. Here's the critical context. AI infrastructure demand is exploding right now. Data centers need memory, they need storage, and the companies supplying that hardware are printing money. Druckenmiller called the dot-com crash. He navigated the 2008 financial crisis. When this man repositions this aggressively, the market pays attention. The 13F filing is a quarterly snapshot, filed 45 days after quarter end. By the time you see it, the smart money has already moved. The question is, are you moving with it? Think about that for a second. While retail investors were still holding Alphabet, Druckenmiller was already out the door. Memory stocks have been on a tear. The AI build-out isn't slowing down. It's accelerating. Every large language model, every GPU cluster, every hyperscaler data center runs on memory chips. But here's what nobody is saying about this yet. The mainstream narrative is that Google is an AI winner. Gemini, search dominance, cloud growth. The story sounds bulletproof. But Druckenmiller isn't betting on the AI application layer anymore. He's betting on the AI infrastructure layer. That is a profound distinction. Application layer valuations are stretched. Infrastructure layer demand is non-negotiable. You can debate which AI chatbot wins. You cannot debate that every single one of them needs memory chips to run. First consideration. Look at your own big tech exposure. If you're overweight application layer AI names, Druckenmiller's move raises a legitimate question about where the next leg of alpha actually lives. Second, study the memory and storage sector directly. Understand the supply-demand dynamics, the pricing cycles, and which companies have the most direct leverage to AI infrastructure spending right now. Third, watch upcoming earnings from the memory space. Forward guidance on data center contracts will tell you whether this trade has legs, or whether Druckenmiller got in at the peak. One of the sharpest macro minds alive just walked away from Google and ran straight into memory chips. What do you think this means for your portfolio? Drop it below. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.